Question number 5. From the following information, prepare fixed asset account and accumulated depreciation account. The accumulated depreciation account is otherwise named as provision for depreciation. Is that okay? So from this it is very clear we have to transfer the depreciation to the accumulated depreciation account rather than adjusted in the asset account, right? So you better have the format here. Already I guided you to understand the format, so finish up the format first of all. Okay, format here. In case asset account along with the provision, this is the format. This is the format. Asset account as well as provision for depreciation account. You just mug up this format. First understand and then by heart this. Understanding will give you the clarity over this. Mugging up making you solve the illustration faster. Both you need for the professional exams. Now, in this fifth illustration, I had to open fixed asset account. Fixed asset account as well as provision for depreciation account. Provision for depreciation account. And in fixed asset, opening balance should be in the debit side, closing balance should be in the credit side. If any transaction increases the fixed asset, should be posted in the debit side. Transaction decreases the fixed asset, should be in the credit side. In case of provision for depreciation, opening balance should be in the credit side, closing balance should be in the debit side. What are the transaction rises of fixed assets? The purchases. What are the transaction reduces this? Sale. On sale, you get the money, bank account, sale, and accumulated depreciation on this asset from the date of purchase to the date of sale should be transferable from here to here. Okay. Provision for depreciation. Here, for the asset sold, the accumulated depreciation transferred. You understand? Transferred. Apart from that, on sale, you either get profit or loss. Profit increases the value, so it should be in the debit side. Profit on sale. Loss on sale will reduce the value. So you have to understand this one, this block. All the things will happen at the time of sale. This entire set. Where either you get profit or loss. When it is being the sale, you have to keep three ideas in your mind. One is amount collection. Next one is the accumulated depreciation since the date of purchase of the sold asset to the date of sale. Available in provision for depreciation is transferred. Third one is all about either you get profit or loss. In case of profit, it should be in the debit side. In case of loss, it should be in the credit side. You have to understand this. And the current year depreciation for all the assets put together will be available here. Okay, this is current year depreciation for all the assets. Year on year, the year's depreciation will be added to the provision for depreciation. In the beginning, we had the provision for depreciation. Current year's depreciation is added with that. This is what about the provisions logic. And when any of the assets sold, the accumulated depreciation on the asset sold is transferred from the provision for depreciation to fixed assets. Fixed. Okay, understand the logics. Now, fixed assets, opening and closing balance. I just now post all the available information as per the format here. 5 lakhs, 50,000. Accumulated depreciation in the beginning 80, in the end 1,35,000. Additional information, a part of machine costing 60 has been sold for 30. which accumulated depreciation was 15. So 60 is the original cost. Accumulated depreciation on this being 15 and the WD value on this asset being 45. Sold for 30,000 cash realized. Out of 45, 30 is realized, and what about the remaining 15? You get lesser value, so it's a loss. Now I'm going to post this one 30,000 sale value, loss on sale 15,000, loss on sale 15,000. Accumulated depreciation of the sold asset is transferred from provision for depreciation to fixed asset account. As we have the loss, definitely we don't have profit on sale. Either you get profit or loss. We got loss, so definitely we don't have that profit. Now tally the rest. If you tally this 1,50,000 rupees provision for depreciation in the debit side, and we get a balance of 70,000 rupees in the credit side, this 70,000 is called as current year's depreciation for all the assets we now have. On tallying this, 550 plus 60, 6 lakhs 10,000, 6 lakhs 10,000. We get a balance of 2 lakhs 10,000. The 2 lakhs 10,000 in the debit side could be a reason of either bank or profit on sale. Definitely, we don't have the profit on sale. So this balance should be only new asset purchased. Is that okay? So we found out this balance as well as this balance. How can I decide that this is being the purchased amount? Because only two things will be there to increase the fixed assets value. One is profit, another one is purchases. But from the transaction, we came to know that we have only loss. Definitely, we don't have the profit. As we don't have the profit, whatever the balance will get only due to the purchase of the asset. Is that clear? Hope now you'll be able to understand this illustration. Now, see, to master yourself in depreciation, we have to complete 7 aspects. Currently, we have completed 5 aspects, including treatment of depreciation in our accounts, where the depreciation directly adjusted in the asset account or accumulated in the provision for depreciation account. During the time of sale, that sale is adjusted in the asset account itself. Sometimes that sold asset is transferred to a new account called asset disposal account, and then it may be sold. We have studied that one also. We still have 2 methods to understand further: revaluation and impairment, and change of method of depreciation. Change of method of depreciation. Let me first finish up 7th one. 7th one, change of method of depreciation as well as change of estimation. Method of depreciation as well as estimate. We need to understand how to change these two here. Now, come on. What are the factors are affecting the depreciation calculation? You know that always remember the depreciation is equal to original value minus scrap value divided by life. So, if all the 3 is given to you, then the problem may be very simple. If you buy a bike, if I ask you a question, what could be the estimated life of the bike? Will you be able to give the answer? You purchased a bike for rupees 1 lakh. If I ask you what could be the life of the bike? No, sir. How can I? Yes, sir. It's only estimation. So now the life of the bike is also estimation, maybe 4 to 6 years. Similarly, by the end of the life, at what rate you can sell in the market? Sir, how can I say that now, sir? Scrap value also maybe 5,000 or 10,000. I am not sure. Only one thing you are very clear, which is called original cost. Only original value where you paid and purchased, so you are aware about what is the original cost. Even for that also there is a confusion. Original value also there is a confusion. What confusions are we have? I purchased the car or bike or any machine for $1 lakh, for $1 lakh from foreign. Per dollar cost us rupees 80. Then you thought the car cost or the machine cost is 80 lakhs. Maybe 80 lakhs. Is that okay? But the vendor says you no need to pay the money immediately, sir. Takes 3 months or 6 months time. You can pay later. Immediately, I just wrote the answer this way: asset account debit to creditor. To creditor. Am I right? Now I can calculate the depreciation this way. 80 lakhs is the assets value. Maybe 5 lakhs, maybe the scrap. This is only estimation, and year maybe 5 years also estimation. But 80 lakhs I supposed to pay to the creditors for the purchases asset. That seller who is in USA gave me 6 months time. I am very happy because I purchased. The money will be payable only after 6 months. Means I am pretty happy. I am enjoying 6 months credit period. At the time of actual payment, this is today, and 6 months after, 6 months after, what happens? I have to pay $1 lakh. The seller asked me to pay the amount, so I said, okay, I'll pay. How much I have to pay? As per the contract, $1 lakh. When I approach the banker, give me $1 lakh because I don't have the dollar. I have to give Indian currency and convert that Indian currency into the dollar, and then I have to remit to foreign vendor. If I ask, the vendor says, the banker says, per dollar today is 85. Per dollar cost us 85. Oh my God, 6 months ago, per dollar is 80. Today, $1 is 85. For the vendor settlement, I have to get $1 lakh. $1 is now 85, means I have to pay 85 lakhs to get the money. So automatically what happens? Now I have to pay in terms of Indian currency 5 lakhs rupees excess for the same asset. Later that 5 lakhs will also be addable as per some of the accounting standards. Even the original value is also a doubt. The three predominant cases are there, or factors are there to determine the depreciation. One is original cost, another one is scrap value, another one is life. The trouble is here, leaving the original cost, rest of the two are the estimations only. The estimations may not be correct. Okay, I thought the asset will come for 5 years. 5 years. By the end of first year, I just asked that evaluator to come and evaluate the remaining life of the asset. So he checks the status of the machine, says that, sir, you are using your machine sparingly, cautiously, and effectively. Because of this reason, the asset will have still further 7 years, sir. See, you thought the asset will have 5 years. 1 year later, remaining should be 4 lakhs as per your estimation. But anyhow, I called an expert. Engineer came and investigated the machine's performances and told me, sir, you are maintaining neatly and used it sparingly. Definitely the life will be still another 7 years. I am pretty happy. Or the engineer may say, sir, you have used rough usage life. So the machine will have only another 2 years life. So the life will also be getting changed year after year based on that day's status of the machine. Scrap value also, right? So if you purchase the mobile which is capable of working for 20 years without any problem, will you purchase the mobile again? How can I do the business? The mobile manufacturers are thinking in that way. What will they do? Somehow the mobile will get corrupt in a matter of 3 years. So that they will produce new mobile and they will sell them new mobile. That's the logic. Even bulb, electricity, tube lights and all will work for only 2 years. In the very first period, when they produce the electricity bulb and tubes, older days, it will work for 15 years, 20 years. Then 15 years, 20 years, you all purchase the bulb and you use that bulb in your home. Thereafter, the seller, the manufacturer come seller should wait for at least 20 years to sell one more bulb. Then it is not profitable for them. Then they made the bulb in such a way it should get spoiled within 2 years. Right. The same happens here also. I'm not sure whether the machine will work for 7 years, but 2 years or 3 years later, that becomes useless. That becomes useless. You understand? So these are the things you have to keep in your mind. that life as well as scrap values are estimated only. Those two will be constantly estimated every year later. Let's see. Now let's see. Now, question number 6. Change in estimated useful life. Change in estimated useful life. A machine costing 13,75,000 is depreciated on straight line basis, assuming 8 years and zero residual value. Now, what happens then? You have to find out the depreciation every year. Original value minus scrap value divided by life. Original value being 13,75,000, scrap value being 0, and residual value being 8 years. Come on, tell me what is the amount of depreciation? 1,71,875. But the thing to be noted here is after third year, the machine's remaining useful life was reassessed at 7 years. Calculate the amount of depreciation charged for fourth year. So as per the SLM method, the depreciation for every year being 1,71,875, you have to depreciate this over the life, probably 8 years. But out of 8 years is the estimation, 3 years over, 3 years over. Remaining how many years we still have? 5 years. By the end of third year, we call the expert to analyze whether the life of the asset is still exists the same 5 or higher or lower. Then he investigates and he says and gives the certifications. You have maintained that asset superbly. So the remaining life is not 5. You can extend that to 8 years. Sorry, 7 years. So at the end of third year, the machine should have only 5 years, right? On reinvestigation, reassessment, we found that the life being another 7 years. Another 7 years, we got confused. Now the question is, what is the depreciation for the fourth year? Year 1, depreciation being 1,71,875. Year 2, the depreciation being 1,71,875. Year 3, 1,71,875. What is the depreciation for the fourth year? That's the question. See, we have completed change in estimations. Depreciation is based on 3 factors: original value, scrap value, and life. What happens if these 3 factors are getting affected due to some reasons? The life may be getting affected due to usage. If you are using sparingly and maintaining everything perfect manner, then definitely life may be extended. Yes, the life may be decreased than the estimation. Scrap value also gets affected. So periodically we'll go for reviewing, reassessing whether these values are correct or not. Based on that, the depreciation year on year will be changed. And you know that predominantly we have 2 models, SLM method and WDV method. For the last few years, you followed SLM method. Suddenly this year, you want to change that WDV method. Can I shift the methods of depreciation from one to the other? Okay.